And then now I get to introduce our special guest, Mike Ross, who's a financial consultant with Northwest Premier. Mike reached out to me and just explained to me, he's like, I've got some things up my sleeve for your agents, things that we need to know, things that we might be missing out, deductions, ways that we can save money. Um, and so I'm excited to introduce Mike so he can get us started. Remember, today is part one, and then Thursday is going to be part two, and we'll go into full detail on Thursday. So don't hesitate to get in that class as well. Okay, Mike, thank you.
Yeah, absolutely. Yes. So as she mentioned, my name is Mike Ross. I'm one of the owners of Northwest Premier Creative Financial Solutions. And my job today will be to make taxes as fun as possible for you all, because I know that's everyone's favorite subject. And if you don't know this already, and you filed an extension for 2023, if you were an S corporation, yes, if you were an S corporation and you filed an extension for 2023, don't forget your taxes are due September 15th. So less than, well, pretty much 15 days away. Then if you're not an S corporation and you're everyone else, your taxes are due October 15th. So I'm giving you almost 2 months to get that stuff ready. Just to give you a heads up, if anyone came to us right now needing 2023 and you're an S corporation, it's almost impossible for us to get to at the moment. So don't stress out your current bookkeepers and your current CPAs. Try and talk to them ASAP. And if they're not responsive, you know who to use next year, right here. So today, my goal, again, is not only to make taxes fun for you guys, but I want to shed some light on some opportunities that you guys can hopefully find in your business throughout the year, because I constantly get questions about what's deductible, right? Can I deduct my season tickets? Can I deduct my car? Should I lease? How do I hire my kids? How do I rent out my house? Should I buy rentals? What should I do? On all sorts of these questions come up. So go to the next slide, please. Next one after that. So as we go through this presentation together, you can reach out to them, or if you have your phone on you right now, you can screenshot this, and this will take you to our link tree, which has our website. It also has a way you can connect to us for a free 20-minute consultation. The consultation isn't me just to sell you on our company at all. The whole point of me doing this presentation for you guys right now is to bring so much value to you guys that at the end of the day, when you need to hire a bookkeeper or a tax filer, you don't want to go anywhere else, because we have all the value that we just brought to you today. You can also go on there, check out our social media pages. And then lastly, we actually wrote a book on financial deductions for real estate agents. It's called The Financial Blueprint for Real Estate Agents. It was a #1 bestseller on Amazon opening weekend. And this in here has all the tricks you need that top producers across the country use to keep more of their hard-earned money. So let's dive into just a little more background on us, and then we'll dive right into the meat and bones of the presentation, okay? All right, so again, my name is Mike Ross. I'm the owners of Northwest Premier, and our goal is to be the go-to trusted financial advocates for real estate agents all across the country, okay? That's why we wrote the book. It's so we can reach every agent across the country. You guys work extremely, extremely hard for your money. We want to show you how to keep more of it using proper tax planning as well as proper bookkeeping. We had three, go to the next slide, please. I'm used to doing the clicking thing, so that's my fault. I'm sorry. We have 3 departments at our company. We have financial consulting, which is what we can just talk about literally anything. It's where we sit in the center hub of our our client's financial world. You want to go to the next slide? We sit in the center hub of our client's financial world. We bring all the advisors together in the same room virtually, sometimes physically, to make sure you know exactly what you have, why you have it, and if it's in alignment with what you actually want to accomplish. Now, I'm sure you've heard financial information and tax information from everywhere, from your mom to your team lead, to your brothers, sisters, from Dave Ramsey to Robert Kiyosaki. You ask anyone, everyone's got their own 2 cents on what to do with your money and how to do it the best way. But it's not always about their way, it's about your way, right? The hardest thing is most people, when they get into the industry, they go find their team, their network of help, right? They'll go find a bookkeeper, an attorney, a mortgage broker, an insurance broker, CPA, financial advisor. However, if they're not all talking together, they could be telling you the truth, but in a misleading way, because they don't know that what your goals are actually trying to accomplish. For an example, if you go to your CPA. Is it fair to say that their main job is to lower your tax bill, which would and ultimately lower your taxable income, correct? But if you end up going to your mortgage broker and you want to invest in the greatest asset known to humankind, which is real estate, right? Then your mortgage broker is going to want to see higher income, typically, because you can qualify for more houses. I'm sure everyone on this phone call has shown someone who owns a business houses out there, and the business owner says, I make $400,000 a year. And then you get their tax returns and you say, actually, your taxes are showing you make 50 grand a year, not 400, because they don't know the difference between gross revenue, or they wrote everything off and then their actual take-home income is nothing, right? So that's the financial consulting department. We also have business planning. Business planning, we can talk a little more later, but just for time's sake, I'm gonna glance over that because you guys, I'm sure, have amazing business planning at your guys' brokerage. And then what we're most known for all across the country, well, at least the 20 states that we're in currently, is our bookkeeping department. And within bookkeeping, I'll keep it short and simple. I'll just give you the sales pitch right here. The average real estate agent that works with us and hires us as their bookkeepers gets a 10% take-home raise just from our creative tax strategies alone. So let's dive into the fun stuff. What you guys are all here for, 100 deductions for real estate agents, part uno. Ready? All right, next slide, please. Okay, so I think it's really important before we dive into all the creativity and stuff, we just build the foundation, because a lot of people that I've realized who are real estate agents get into the industry not knowing that you're actually about to become a business owner, right? So let's just go through the basic philosophy of what a tax deduction is. Now, normally this is where I would unmute or let everyone unmute themselves and chime in and tell me what their tax deduction is. However, for time's sake, I'm just going to play the next video, which explains what a tax deduction is better than I could, even though I'm still going to give you the definition after the video. So if you want to play the video, we'll go from there. For it. So I had the same questions. And I remember all my friends thought everything I did was just paid by the company, but they keep forgetting that I am the company. So even though the lunch is a company deduction, it's not like it's 100% free right off the bat. Like I get a discount at the end of the year against my taxable income. So next slide. And you can skip through the video. Right there, yeah. So as he mentioned, a tax deduction is a business expense that lowers a person's or organization's tax liability by lowering their taxable income, okay? So that's the bare bones what a deduction is. So the next slide, we're gonna talk about 3 reasons why you'd want to use a tax deduction. And then we're gonna talk about 3 reasons why you would not want to use a tax deduction. Okay, because a lot of people have this idea, they want to just write everything off. So number 1 is the obvious one, which we just talked about, is to lower your current tax liability. Every time you find a deduction, you get to lower your taxable income. So that's great. However, we'll get to the next part on why that might not always be the best thing. The second reason why you'd want to use a tax deduction and calculate for it is to accurately calculate the difference between gross commissions and personal income. This is the number 1 reason why I've seen real estate agents and independent contractors fail out of the industry time and time again. I hate seeing it, but it's because they don't know their numbers. So I do not mean to be like a little harsh on this one, but you guys, remember, you guys are business owners, so you need to know your numbers. You need to know your percentages. How much are you spending in marketing? What's your gross profit? You know, what's your profit at the end of the net profit at the end of the year? How much money are you spending on meals and client gifts and marketing and you know, your fuel and driving and all those things, insurances. You need to know your numbers at the end of the year. Every time I see agents say, I want to make $100,000 once they first get in the industry, I always ask them, is that $100,000 take home? Or is that $100,000 gross commissions? Because it was $100,000 gross commissions, you got your taxes coming out of that. You got the expenses like photography that I'm sure you guys all pay for at some point, right? You have photography, where you have driving, the gas, the meals, the client gifts, the marketing, all the leads. You have all these expenses that are coming out. So your $100,000 that you want to earn might really only be like 20 grand take home, 40 grand take home. So you guys need to know your numbers so you can continually to grow your business throughout the year. I want to be able to ask you guys at the end of the year, how much money did you spend in marketing? and you know exactly what it is and the percentage, so we know what would work or not work or have to shift next year. Okay. So not to be too harsh on that, but it's just I've seen it time and time again. Know your numbers. Number 3, why do one needs tax deductions? To defer taxes for potential savings. So most people I know have talked to some type of financial advisor in the past. And the financial advisor will say, hey, if you invest into do you have a 401k? And then most people say no. And they're like, okay, well, let's get you like a 401k or a SEP or a simple or some kind of retirement account. If it's a tax deferred retirement account, they're going to say, hey, you can save taxes if you put at the end of the year, if you put 20 grand or whatever into your SEP, your retirement account. You say, that sounds awesome. I'm going to keep the money, put it in retirement. I need it anyway. And I lower my tax bill. That is not true entirely. Yes, you get the tax deduction for this current year, but you're also kicking the can down the road, because when you turn 59 and a half, you are now able to use your retirement account, but I do not know what the tax rate is going to be when you all turn 59 and a half. To give you some context, just over 4 years ago, we were at a 100-year low in our federal tax rates. Federal taxes only became a thing in 1913. And the reason was, or 1914, the reason was is to fund World War I. And it was only supposed to be a 2-year plan. And guess what's still around today? The 2-year plan had the highest income earners being taxed at 8% and the lowest income earners being taxed at 2%. And everyone was okay with it because that was when patriotism was at its all-time high. We're going World War I. We're going to go kick some ass over there. So everyone did their part. But then you realize that the government's like, oh, this is pretty cool. We just took a bunch of money and didn't have to fund anything ourselves. So they kept it around. But we'll talk about that another time. Point is, know where you're at tax-wise this year, and just know if you're putting it into a retirement account, it's okay if it's a sole purpose is for retirement. Just remember, if you put it in a deferred account, you are saving taxes this year, but you will end up paying those down the road. Now, hopefully, the growth will outperform and all that kind of stuff. Just know, I just want you to be aware of what's going on. It's your decision, do whatever you want with the money. That's just what I wanted to bring up. So, next. 3 key reasons why you do not want to use tax deduction. First one, we talked about this earlier, is lending. Again, I'm sure many of you guys have talked to business owners out in the bars or at restaurants or networking somewhere, and they all say how much money they make when you talk about real estate and lending. And then you look at their tax returns and there's nothing on there, right? I know real estate agents all the time who say they want to not pay tax bills. So we do everything we can to be aggressive and deduct everything and all this stuff. And then at the end of the year, they're like, ooh, actually a real good opportunity came by. I need to shift my income to reflect a certain number. Well, we can help assist that a little bit, but you also have to realize that, we need to be planning further ahead, right? And just know if you are going to be deducting things, your lending power goes down. One of my favorite quotes ever is, this is how you think of taxes now. Paying your taxes is an investment in your borrowing power. So yes, you may be paying a higher tax bill, but now the banks are going to lend you a lot more money because you showed more income. So one more time, paying your taxes is an investment in your borrowing power. And that might be, my Canadian might be coming out in there as borrowing or whatever. I say borrowing, my bad. The borrowing power, how are you supposed to say it? But so that's what you need to remember. Yes, you're paying a higher tax bill, but okay, cool. You paid 30 grand in taxes, but now guess what? You get to borrow $1 million through real estate. That's freaking awesome. So just know and understand that if you do not want to use tax deduction, one reason is for lending. Another one is to avoid future tax increases. And here's an example. I see people all the time saying, I don't want to pay tax bill this year. So they deduct. But there's some people who are really aggressive on deductions, but this was one of their mediocre years or normal years that they had in real estate. If you're too aggressive on all your deductions and you use them all this year, what happens next year when you double your business? You just used all your deductions. So now you're paying even a higher tax bill because you weren't preparing for this massive year you had the next year. So again, if you know your numbers and where you sit tax-wise throughout the year, because you have a profit and loss statement every month coming from someone, could be us. Shameless plug there, by the way. If you know your numbers and what's going on, then we can plan accordingly, right? And you may not want to use all your deductions this year because you know you already have in the pipeline like 10 closings that are going to happen in January. So we won't be as aggressive this year. We'll be aggressive next year. Okay. Next one, maximum protection. I don't know if you guys remember this, but if any of you guys were a W-2 employee before, so just a regular employee, you guys all had these really cool things called benefits. Remember that? Health insurance paid for, kind of. You had your retirement account set up. You had disability insurance, life insurance, short-term disability, all the things. And then you became real estate agents because someone wanted you to come on their team or sold you the dream on it. And you now live in it, right? But what you lost was your benefits package. So now you all, Eric, I see you crying there. It's okay. It'll be all right. So now you guys all have to create your own benefit package. However, two of the benefit packages or two of the benefits that you can apply for and get your own would be life insurance and disability insurance. Guess what is one of the factors that they look at to see how much you qualify for? The answer is income, because I realize everyone's muted. The answer is income. So if you deduct everything and you're showing no income or very little, the insurance companies are going to say, why are we protecting your income if you're not making any? We're not going to give you a $5 million life insurance policy, let alone $1 million life insurance policy or anything, because you're not showing more than like 20 grand of income. So no, right? Same thing with disability insurance. Disability insurance, if you get it on your own, will cover 60% of your taxable income. So if you're showing $100,000 of taxable income, they'll insure you for up to $60,000 a year. But if you're showing $20,000 of income, they're only doing 60% of that, which I should know the answer to, but I do not. So the point is, if you're going to be showing a high taxable income for 1 year because you want to qualify for a home, I would also double down and renew your life insurance and your disability insurance. So that way you're already paying high taxes, might as well get the benefit package with it. Okay. That's a little proactive planning. I'm going fast. All right, next. Cool. All right. So now that we have the basic understanding of tax deductions, so business expense to lower somebody's taxable income, you want to use it for lowering your taxable income, deferring tax savings. You want to use it so you can track your business appropriately. You wouldn't want to use it if you want lending, when you get maximum protection, all that. Now that you understand it, let's talk about some really cool stuff, okay? Well, it's cool to me. Okay. Number one is entity selection. Now, if you guys want, you can enter in the chat or you can unmute yourself for this one. How many people in here are an LLC? I'll give you a second to enter it in the chat, or you guys can just say, unmute yourself. Yeah, one person so far. If you go to the next slide, these are all your options when you come into the real estate game. You can choose between a sole proprietorship, a partnership, S corporation, C corporation, or an LLC. Which one should you be when you first start out? S-corp? Anybody else? Everyone, if you do not answer, you do not know, you are by default a sole proprietor, because that's what you are if you make any money. You get a 1099, your sole proprietor is the easiest one to become because you already won once you become a real estate agent. However, sole proprietors are the most painful way to get taxed in this country. And here's why. If you are a sole proprietor and you don't have your LLC filing as an S-corp, you're an LLC filing as a sole proprietor, or just a sole proprietor without the LLC, if you're a sole proprietor at all, you have this really, 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 really painful tax that I'm sure you're aware of if you've been in the industry for a while. It's called self-employment tax. Self-employment tax is 15.3% above your other income taxes or any other state income taxes you have. It is absolutely brutal and cripples businesses time and time again. Let's say, for an example, you made $150,000 gross commissions income your first year. You found $50,000 worth of expenses. So now your taxable income is now $100,000 that you get to take home. Yay. Oh, wait, you have taxes. Self-employment tax on $100,000 is $15,300 that you were paying to the IRS right off the bat. That is absolutely painful. So we want to limit
And
that.
I did.
Yep, you did.
Happened. Yes, happened to me.
It's a
19,000. I remember that check. It was horrible having to write it. It was painful.
Yeah, it's you're not alone. There's realtors all the time who do that. And I think the main reason again is because you guys aren't focused on bookkeeping or tax planning when you first get in the industry. You just focus on surviving, right? So I want to make sure I'm not losing my battery real quick. Let's see. All right, charge it up. You guys are focused on making money and surviving. You're not focused on, oh, where's my books at? And then, you get a little behind and then you go year after year. And then it's just one of those things you don't think about because no one's like, can't wait to go into real estate so I can do bookkeeping and taxes. So I totally get it. Totally get it. But now that you know this, you have this really nasty tax called self-employment tax and you're paying it on sole proprietorship. How do you get rid of it? Great question, you guys. Well, I suggest once you get your license or today, one takeaway from today, if you are not an LLC today, you guys are all in Washington or Oregon, right? Washington, Oregon-ish. So one takeaway from today, if you haven't done already, is go online and apply for your LLC right now. Not now, after this class, later today, whenever you guys are all done. An LLC should not be more than $200 and it's a business deduction. The reason why you want to get an LLC is there's 3 reasons why you want to get an LLC. Okay. I'm going to go over them right now. Number 1, an LLC separates your personal and your business assets and finances. So it's Organization 101. If you guys have one bank account where your money's coming in and business expenses are going out, that is what we call commingling. Commingling is the #1 reason you will get audited from the IRS. The IRS says, if you're not treating yourself like a business, why should we? So if you have one bank account that has business income coming in and business income going out and personal income going in and personal income going out or personal income going out, all that stuff, you're commingling. You need to stop it today because it could get you in trouble down the road. So once you file for an LLC, it now separates your business and personal assets because step 2 of that is you are now going to apply for what's called an EIN number. An EIN number stands for Employer Identification Number, and it acts as a social security number for your business. So you applied for the LLC, you get approved, apply for the EIN, that's free. And then you go open up a business checking account underneath your LLC and EIN. If you already have a business checking account, but it's still tied to your personal social security, you need that's good, but it's not the full way. Now you got to get the LLC EIN to make it official. The reason is if you guys get sued on the personal side, let's say you're throwing a house party and or you have a trampoline, that's an easy one, and some kid hurts himself. The parent may not want to sue you because they hate you. They're just suing you because they need the help, right? Because the medical bills are expensive. If you do not have the LLC, the parents will sue you and have access to your personal and your business finances. If you have the LLC, they have to form another lawsuit to go into and pierce the company veil. So step 1 is an LLC for organization and separation of your business and personal assets, okay? Step number 3 is a tax saving one, so pay attention. Now that you're an LLC, you can still elect to become a sole proprietor, or you can elect to be a partnership, or you can elect to be a C-corp, or you can elect to be an S-corporation. The LLC has no tax benefits at all as itself. As a standalone LLC, there's no tax benefit, strictly for legal protection and organization. But step 3 would be you can file your LLC no longer as a sole proprietor, but as an S-corporation. And here's why I want to do that. Let's go back to our example of the real estate agent that made $150,000 GCI. Now it's the exact same situation. You made $150,000 GCI. You found $50,000 of expenses. You made $100,000 taxable income. Awesome. Oh shit, I got the 15.3% self-employment tax. But that one financial guy told me to become an S-corp. Let's do that. Now we can split that $100,000 up into two separate categories. I should be drawing on my screen, but I forgot my pen at home. So you're gonna watch my fingers. So that $100,000 is split into two separate categories. One is called a reasonable salary. You now become an employee of your own company, okay? The other side of the money is called profits or distribution of your company. Because if you're a successful company, you should have profits at the end of the year. Here's why you do that. Everything on the salary side, which is a reasonable salary, still does have self-employment tax, but is now called payroll taxes, okay? But everything on the other side of the coin, which is profits and distributions, everything on that side has no self-employment tax all the way up to $168,900. So in this situation where you had $100,000 taxable income, for math's sakes, let's just split it into two: $50,000 salary, $50,000 profits distributions. Now you're not paying $15,300. You're splitting that bill in half because, right, what we just did. So you're saving $7,650 by becoming an S corporation. So you made the exact same amount of money, but you saved $7,650 because you became an S corp. Now, the reasonable salary is supposed to be a reasonable salary, so we adjust it here and there. So we would probably put that person at like a $30,000 salary or 40, and then 60 would be into profit, so you save more money. But the point is, the S corporation will save you thousands and thousands and thousands of dollars. I think the most that we save somebody is like $70,000 right off the bat by becoming an S corp in taxes. So here's reason number 4 that I'm going to bring up for becoming an LLC today. If you're like, damn it, I should have become an S corporation way earlier this year. I wish this meeting would have happened and Mike and Candace would have met many moons ago, right? And it didn't happen. If you get your LLC today, you can always do what's called a retroactive backdated S corporation. So some CPAs and some tax filers, I'm not saying who, but we can go all the way back to the beginning of the year to have you become an S corporation. Most other CPAs some people only do it from the date of your LLC. So get your LLC today. Legal protection, financial separation, and organization, option to do a backdated S corp. It was a lot for anyone who hasn't heard that before. So I'm going to open it up for questions for a minute, also check in on time and how I'm doing there.
That was great.
Absolutely great. The painful reminder I had my second year in real estate, just it popped up there, but this was really good.
So you're an S corp
and easy to understand. I'm an S-corp. Yes.
You're good.
When I came to Best Choice Realty, that's when I learned. Thank you, Rochelle.
Good.
But
Yeah.
yes.
So again, if you want to go back to the QR code.
And Mike, I get a lot of questions that they say, well, I haven't made enough money. What is the amount of money you should make before you do an S-corp? Is there a threshold?
Yep. So we always recommend the second you hit about $70,000, $60,000 to $70,000 net income, then the S corporation starts to make sense. And the reason is the tax savings has to weigh out the benefit of the cost of what it costs to become an S corp. So now that you're an S corporation, you have to file business tax returns and personal tax returns. Business tax returns are due on March 15th. Personal tax returns are due on April 15th. So you're paying a CPA to do both of those. You're also having to add payroll. So you need to use a company like ADP or Gusto or what BBSI is another one, or there's a couple other, QuickBooks has it, but you have to use payroll and that's another cost. Then you also have to hire a bookkeeper like us, and then we're another cost as well. Now, the one thing I told you at the beginning of our presentation was that the average real estate agent gets a 10% raise from us working with them. If you're an S corporation in this room, Rachel, Candace, is it Maricon? Anyone who's an S corp in this room, if I cannot save you a minimum of $3,000 in tax savings just from us talking on the phone, then I wouldn't let you guys hire us anyway. the CPA, the bookkeeper, tax filer, tax strategist, our people like us should be making you money. We should never be looked at as an expense or a cost. Our job is to make sure you're keeping more of that money. And the more, that's a real rate of return. That's not a financial advisor saying we're gonna get you 20% in the market. That's me saying I'm gonna lower your tax bill and save you a certain percent of income. So that you get to keep. I think my favorite thing at the end of the year is every tax season we get people, a lot of our clients send us pictures of what they, it's not always like the smartest things in the world, but it's what they bought from the tax savings we got out. Like one guy bought like a new ATV, another guy bought like a boat, another guy didn't. They just do all sorts of stuff they buy. When somebody bought a really nice expensive Louis Vuitton purse that they've always wanted. So no judgment. It's money. It's your money anyway. So any other questions on S corporations? And then if you guys are going to come on Thursday, I'm going to do part 2 of this class, which we dive into the really, really cool strategies. We'll talk about like how employing your kids. We'll talk about the Augusta rule. We'll talk about how to deduct every single vacation, which will not be a business meeting you go to. We'll talk about deducting cars, the 6,000 pound rule. We'll do all sorts of fun stuff on Thursday. Thursday, whenever our time is, Thursday at 11. So that'll be a lot of fun. I'm going to breeze through this again, by the way, on Thursday. So if you're here, just bear with me for the first like 15, 20 minutes. I'll kind of go faster on it, but then we'll go have some fun with the other stuff. Questions?
Just to recap, it's 10 a.m. on
10 a.m.
Thursday.
Yeah.
That's
10
why I meant.
a.m. Yes. That's all. Yeah. I'm excited. I think when it comes to this, you know, a lot of times I feel like it's stuff that we don't want to kind of get involved with, but I'm telling you that pain that I had my second year in real estate versus, you know, my third, fourth year in real estate, getting my S-corp, being able to backdate it and the money that was saved, and even over the years making more, and just knowing that, you know, the money that I'm saving by having that, and taking the proper steps to have the consultation and be advised properly is really important. It's a nice peace of mind as well. So
Yeah. So again, I want to remind
Eileen asked, do you offer an initial consulting? I think you did say you do a 20-minute. They can reach you on the link tree.
Yep. Yeah. So here's Eileen's question. Yeah, we do offer it for the first 20 minutes is just a free consultation for literally anything you want to talk about. Again, it's not me selling you. Hopefully I just did that, showing you I know what I'm talking about in those last 30 minutes. It could be simply like sending you, walking you through the LLC process again, if it makes sense to be an S-corp for you. Just, you know, just some random questions you guys have in general in your personal situation. But that QR code will take you to our website. It should say work with us, and then you can fill out a form. Our operations manager and our client care specialist will reach out to you guys, schedule the meeting for us, but we'll go over whatever you guys want to talk about. It's not me just saying how great we are, because I think I just did that.
Awesome. Wonderful, wonderful, wonderful. Is there any other questions? Feel free to unmute yourself and just ask direct. Was there anything else before we close up? So just a quick reminder then. Oh, did I hear somebody?
No, it's fine, Candace. I was just gonna say, you know, Mike, we haven't had somebody like you in a couple years present. So it was definitely needed, and I'm hoping that a lot of people will listen to this recording after, because it's very needed in our industry, especially with everything going on, to kind of look at it from a different level, you know, as far as where your finances are situated. I loved how you covered, you know, knowing your numbers. I think that's the number one way to fail as a leader or fail in a business, is you not knowing your numbers.
Correct. I know it's a hard thing to talk about, but
Yep.
yes, you can do this. I'll put my email in here. Ross@w-premier.com. Yeah, and like I love that the offer too, because I mean it's my favorite, because again, we're supposed to be a profit center for you. So if I can't save you that $3,000 just by talking to you on the phone, I think the most I found was I was hanging out in this guy, his client appreciation event. There's this big cruise boat that does, like, it's called the Portland Spirit down here. We went on this big, like, you know, it was a client appreciation event, and I think I saved the guy $48,000 something in deductions. So about like $18,000 in tax savings for him, just on that one conversation over a glass of wine. It was good.
That feels good. Thank you so much. Appreciate it.
Hey,
You're
Mike.
welcome. Anything else, or do you I can hop off or stay on for another minute, or what would you like?
Yeah, actually, I have a question. Actually,
Yeah.
Mike. Yeah, I'm just curious in terms of how you work with your clients going forward. I know that a lot of CPAs typically wait till it's time to file taxes. They collect all the documentation and then they produce a financial report statement, tax returns, etc. But in terms of strategizing with your client, do you do that on a regular basis, like preemptively, like in the beginning of the year? Do you have a strategy meeting with them so that they can kind of plan, see where you were last year, or where you're going, what are your expectations for the following year, and let's talk about how we can do that? Or do you? I find that a lot of CPAs tend to just be reactive. It's like, okay, here's what I did last year. Let me just see what I can work with it, and then we give you your return. So tell me about just working and planning, I guess, for the year going forward. Does that make
Yeah.
sense?
Yeah, absolutely. Yep. And what you just described is almost every CPA we've ever met and bookkeeper is most of them are being reactive to whatever you gave them. The other thing too is most of them, we call them filers, right? You see them once a year, you send them the documents and they file taxes. No one being really strategic. So the way we've made ourselves strategic is twofold. Number one, the moment you come on board, we use a software called QuickBooks Online. That's our software we use for all of our clients, all of our real estate agents, no matter where you're at. It's QuickBooks Online. We have to use that. Number two, we get a feel for where you're currently at right now. We clean up the book. So let's say you came to us right now. You said, Mike, I have nothing but bank statements all year. Help me. we set up your QuickBooks Online for you. We get what's called read-only access to the business bank account so we can pull the statements for you. And then we also will clean everything up for this year. Once you're all done and caught up, Howard, then you and I would sit back down together and we go over all the work we did. For two reasons. Number one, we're going to be giving you a profit and loss statement every 15th of the month. So you know exactly where you're at in your business throughout the entire year. You know what your taxable income is going to be, you know how much deductions are happening, all that stuff. But the profit and loss statement is not for me. It's not for my company. It's for you as a business owner, right? You need to know your numbers. So I want to make sure you're happy with the level of detail we're reflecting on your profit and loss statement. I don't want just a generic category called marketing. I want it to be like marketing and then client appreciation events, how much you spend on sponsorships, stuff like that if you want that level of detail. Then from there, I'll talk to you like from a business owner to a business owner's perspective. Because the difference that separates us from the other bookkeepers and CPAs is that my business partner and I own the company and we're the business owners ourselves. So we have 10 employees. We have 11 employees now. We hired one yesterday. Who are bookkeepers, who are doing the day-to-day works. We have an operations manager, front desk, client care. We have an actual business we're running. So you and I'll talk more like business owner to business owner level and look at the percentages in each category to make sure they're reflecting well of what we see the top agents doing across the country. And then we'll forecast too and start talking about tax planning for the rest of the remainder of the year and where we need to go. Once that's done, every single month you're getting that profit and loss statement. And then if you want to have another profit and loss review where we go that in depth with strategies, most of them should all be done at that day, right? Like that, after that initial call and everything, we should be good to go. But if something comes up where you need to talk about a whole different situation, it's only $200 for us to talk again and go over everything in that level of detail. And I will say probably about 80% of our clients will take advantage of that in November, December to do year-end tax planning. And that's when we sit back down and say, hey, like you might be like, hey, I just closed 2 luxury deals I wasn't expecting. I have this huge influx of income. What do I need to do to be able to deduct all as much as I can? Now we can be aggressive and do stuff like prepaying your expenses for 2025, right? Let's just prepay some expenses in 24 to lower your deductions because you had those 2 anomalies that came in at the end of the year. So it's always available to you anytime you want it. You just give us a call. The first one's free, obviously, because I want to make sure we have the strategies we talked about in place. You're happy with the level of detail, and we have that really good meeting in the beginning. And then if you ever want to have another one again outside of that, then it's just $200 one time.
Okay.
Questions?
No, makes sense.
Yeah, I appreciate it. I look
I
forward to
like
working.
that.
Also, if you guys are all from Washington or Oregon, if you want instructions how to get that LLC done, just find a time to talk to me and I will just give that to you stuff for free. It's like step-by-step, links are there. Don't go to use Zoom Legal or LegalZoom because they'll charge you $500 for something that you could do on your own for $200.
Great. Awesome.
Awesome. Thank you. Thank you so much.
Absolutely. I
All
look forward to
right.